Hey folks, welcome to the Monday edition of Tech Stocks Daily. We've got an action-packed episode that you won't want to miss. First up, Shopify makes headlines with exciting new integrations, partnering with Blueshift and Prefixbox to turbocharge customer engagement and search functionality. Then we'll unravel the courtroom drama brewing at Endava as this IT giant faces hefty class action lawsuits over alleged report discrepancies. Finally, we're diving deep into Qualys, where stock options volatility and a notable 52-week low have speculators on the edge of their seats. Whether it's growth narratives, legal battles, or market fluctuations, we've got you covered. So sit tight, tune in, and let's get right into the tech stock frenzy of the day. All right, tech enthusiasts, buckle up because Shopify is making quite the splash today with multiple pieces of news that cast a spotlight on this e-commerce titan. First off, let's dive into the world of customer engagement. Blueshift, a company specializing in customer data platforms and cross-channel marketing, has launched an impressive new initiative, an integration with Shopify via a new app on the Shopify App Store. This collaboration looks to supercharge Shopify users by allowing them to seamlessly synchronize customer data and shopping behaviors with Blueshift's AI-powered marketing platform. What does this mean for Shopify merchants? They can now create personalized and automated marketing campaigns that cater to individual customer journeys without breaking a sweat, thanks to Blueshift's e-commerce accelerator plan. Shopify businesses can launch 9 automated campaigns in just 30 days, targeting key areas like abandoned carts, post-purchase engagement, and personalized product recommendations, all to boost conversions and keep those revenue streams flowing. Wait, there's more. Prefixbox has also hurled its hat into the Shopify ring, releasing their AI search and filter on the Shopify App Store. This feature empowers merchants to revamp their search functionality with AI, thereby enhancing the user experience by delivering quicker, more relevant search results. And let's face it, in a world where time is money, helping customers find what they're looking for faster is a goldmine for improving conversion rates. So, why all the buzz around Shopify? Well, it's not just because of these nifty app launches. Shopify is touted as a must-buy stock right now, and here's why. Despite choppy waters over the past few years, though currently only half of its all-time highs, Shopify continues to demonstrate an incredible growth trajectory. With global e-commerce spending booming, Shopify's ecosystem of tools and services is a digital lifeline for over 2 million merchants worldwide. Their second quarter revealed a 22% increase in gross merchandise value, totaling a whopping $67.2 billion. With continuous product and service enhancements to aid merchants beyond just setting up shop online, Shopify has effectively ingrained itself into their operational fabric, which translates to powerful market stickiness and escalating revenue opportunities. A noteworthy achievement in Shopify's portfolio is their venture into financial services. Shopify Payments and Shop Pay are immense contributors to this, processing significant volumes of sales and enabling user-friendly finance options like buy now, pay later. Financial ingenuity is a growing revenue stream that saw a 19% year-over-year increase, resonating with consumer behavior patterns and adding robust layers to their revenue model. Looking at the numbers, Shopify has started turning its rising revenue into profit, navigating back to profitability after recalibrating its logistics strategy. Analysts zero in on an optimistic 40% annual earnings growth over the next several years. Consider this growth against Shopify's current price-to-earnings ratio, and it paints a picture of a stock that's not just valuable today, but laden with potential for tomorrow. In a nutshell, whether you're a merchant aiming for the e-commerce throne, an investor seeking substantial returns, or just a tech aficionado appreciating the innovation landscape, Shopify is a name to watch. Today's news underscores its influence in the business and financial sectors, reaffirming its status as a powerhouse in the online marketplace realm. Hey tech enthusiasts, we've got some courtroom drama to discuss today, starring none other than Endava plc, the London-based IT juggernaut that's listed on the NYSE under the ticker DAVA. So grab your popcorn as we dive into some serious legal wrangling that's underway over at Endava HQ. First up, it looks like Endava is caught in a legal whirlwind, facing a couple of beefy class action lawsuits. The prominent law firms Braunstein, Jawortz & Grossman LLC and Bernstein Liebard LLP have put out an open call to investors who might have taken a financial hit from their Endava investments. If that sounds like you, lawyers are lining up to represent you faster than a Tesla in a drag race. Here's the lowdown. The lawsuits allege that Endava made some major missteps by failing to report declining demand for their services. Now, had they kept quiet about small office gossip, that would have been manageable, but the quantities they're suspected of suppressing have investors seeing red. Not the kind of in the red that Wall Street frowns upon, but rather it has them reaching out to their lawyers. Apparently, the trouble brewed in 2 pivotal sectors of Endava's business: the payments and financial services and the banking and capital markets verticals. The claim is that demand slipped significantly in these areas, leading to project delays and cancellations that were suspiciously missing from the cheerful reports Endava was giving the public. Not surprisingly, this had an adverse effect on their revenue and earnings forecasts for fiscal years 2023 and 2024. Investors who jumped on the Endava bandwagon between May 23, 2023 and February 28, 2024, may now be eligible to file as part of these class action suits. Both Bronstein, Gewurz and Grossman, and Bernstein-Liebhard have set an important date, October 25, 2024. That's the deadline for investors to scramble for those lead plaintiff positions. Pro tip, being a lead plaintiff means you're the star of the class action show, directing the ominously titled litigation. But don't fret if courtroom showbiz isn't your style. Your chance to pocket any recovery doesn't require taking the lead charge. What's interesting is that both law firms are operating on a contingency basis, meaning they don't get paid unless they win and recover from successes. Think of it as no win, no fee, but with a courtroom twist. It's almost like watching a heist movie, where if they pull off the grand jackpot, everyone gets a share, minus the legal cut. Whether you're an investor gearing up for a legal showdown or a mere spectator of this unfolding saga, it's going to be intriguing to see how things shake out for Endava and their shareholders. More at 11, stay tuned and keep those headlines refreshed. Hey tech enthusiasts, let's dive into why QLYS is catching our attention today. Our friends over at QLYS have been splashed across the news for two big reasons, and it's got the NASDAQ buzzing. First up, let's talk stock options and implied volatility. Apparently, the options market is a bit jittery about QLYS's future movements. There's a November 15, 2024 $85 call option with sky-high implied volatility, meaning that investors foresee some major shifts in QLYS's stock price, potentially in either direction. High implied volatility often signals anticipation of a big event that might cause the stock to either soar or sink. Essentially, it's like awaiting the drop on a roller coaster. Everyone knows it's coming, but they're not sure which way it'll take them. For those into trading, this could be seen as an opportunity to capitalize by selling premium, banking on the hope that the stock doesn't gyrate as wildly as anticipated. It's all about strategy and playing those market moves like a chess game. Gotta love the thrill. But wait, that's not all. On the flip side, QLYS's shares are hanging precariously close to their 52-week low. The stock's taken a hit, plummeting a hefty 35.2% this year, substantially lagging behind the broader tech sector. With economic uncertainties, like the Federal Reserve's interest rate mill and recession fears, looming over our heads, investors are understandably skittish. The cybersecurity sector, including QLYS, has felt these tremors, and with sales growth not quite zipping along as they once did, it's currently a bit of a rough patch. Despite the short-term gloom, there's still a silver lining. QLYS isn't just sitting ducks. They're equipped with a robust product portfolio spanning cybersecurity asset management, patch management, and cloud security solutions. They've got partners aplenty, from the likes of Microsoft Security Copilot enhancements to one-click vulnerability assessments with Google Cloud. Talk about being in good company. Interestingly, the firm's been seeing its VMDR customer base grow significantly, signaling an uptick in the adoption of its solutions. All signs point towards a resilient future once macroeconomic runoff subsides. Plus, the valuation candles on QLYS are looking pretty inviting compared to its peers, making an investment pencil itself in as kind of a tempting prospect for those willing to brave the current storm. So what do you think, folks? Is QLYS just in the eye of a temporary storm, making now the perfect time to jump on board before things clear up? Or do you reckon there's more where those challenges came from? I'm super curious to hear your thoughts. Drop a comment with your take on the QLYS Fest happening on NASDAQ and let's hash this out. Have you had any thrilling moves in the options market based on implied volatility spikes? Tell me everything. All right, let's put on our speculative hats and tackle QLYS for a moment. If you're contemplating a move with this stock based on today's updates, I'd lean towards a position, and let me break down why that could be the way to go. Firstly, QLYS is currently facing some challenges, notably those gut-churning levels of implied volatility in its options market and its shares nearing a 52-week low. The 35.2% stock price drop this year isn't exactly a walk in the park for investors, making this a jittery hold for some. Yet, these fluctuations suggest there's significant activity about to unfold, and with so much market tension, a drastic upward or downward momentum isn't entirely off the table. However, on the brighter side, the fundamentals of QLYS are still strong. They're plunging through tough times with robust cybersecurity solutions, partnerships with big names like Microsoft and Google, and an expanding VMDR customer base. These metrics suggest resilience and a good shot at bouncing back once the economic hurdles settle down. Plus, in the cybersecurity realm, which always holds necessity, QLYS maintains a sturdy operational core with nuanced market relevance. Given these factors, I'd say, because while there's significant volatility, the underlying business promise and solid partnerships could see QLYS navigate through the storm. You wouldn't want to bail just as they may start their upswing. But hey, that's just what's buzzing in my mind space. I'm not a financial advisor, so I can't stress enough. Make sure you do your homework. Dive into those charts, investigate market signals, weigh up those financials in line with your own risk tolerance and future outlook before deciding. And as always, the final move should be yours. And there we have it, folks. Today's been a whirlwind for the tech stocks, with Shopify stealing the spotlight through its strategic app integrations and meteoric growth angles. Meanwhile, Endava's getting tangled in a legal conundrum, which could spell both drama and opportunity for the brave. And over in the cybersecurity corner, Qualys is perched nervously on the edge of volatility. Whether it stands to fall or rise, only the market's crystal ball knows. If you enjoyed today's tech ride, remember to hit that like button, subscribe to stay updated with all the tech stock action, and share the excitement with your fellow tech enthusiasts. Swing by tomorrow for the next buzz of the day. See ya.